Work together 16.3. You can see that there are 4 sections: balance sheet accounts, balance sheet characteristics, assets section, and then our liabilities and equity section. Okay, so taking a look at this, the following list of accounts taken from Superior Corporation's adjusted trial balance. For each account that appears in the balance sheet, indicate the account that should appear in the current assets section, the planned assets section, or the current liability section, the long-term liability section, or the stockholders' equity section. For any accounts that do not appear on the balance sheet, select Not on Balance Sheet. So remember, our balance sheet contains our assets, liabilities, and stockholders' equity. So as we go through here, we will see from cash all the way down to interest receivable, those are assets, and those are considered our current assets. So we're going to remember, current assets are things that can be turned into cash readily. So we have cash, petty cash, accounts receivable, allowance for uncollectible accounts, merchandise inventory, supplies, prepaid insurance, notes receivable, interest receivable. Okay, next we have our plant assets, and our plant assets include things that take a while if we wanted to turn them into cash. So those would be our equipment and our accumulated depreciation for our equipment. Next we have liabilities, and liabilities are part of our balance sheet. We have current liabilities and we have long-term liabilities. And from our example before, our current liabilities are items that we are going to get our cash from within a year. So we have accounts payable, sales tax payable, and so forth. Those are liabilities that we're going to pay off within a year. And so that would include all of our liabilities. Right now we don't have any long-term liabilities. Okay, then our next section deals with our capital stock. Okay, we had capital stock and retained earnings, and that all falls within our capital or stockholders' equity section. The rest of them, dividends, income summary, and sales, that is revenue, so that is not going to be put on there because that is on our income statement. Then we have our sales, our revenue accounts. Remember, that goes on our income statement. Our cost of merchandise sold sections, our purchases and so forth, all go onto our income statement. And then along with all of our expenses, go onto our income statement. So those are not found in the balance sheet. So again, with our balance sheet, it's going to be our assets, liabilities, and stockholders' equity. And those should all be good. Okay, going on to the second section, which is the balance sheet characteristics. We're going to answer a few questions, see how much you remember from what I went through. The amounts for the balance sheet are obtained from which sources? Where are you going to get the information for your balance sheet? Okay, we need our adjusted trial balance. We'll get all of our accounts from. And we need the statement of stockholders' equity so we can get all the information for our stockholders' equity section. An assets related contra account balance is blank, the asset account balance to determine the book value. So when you work with a contra account, it is going to make it go down, so we're going to be deducted from. Of the following, which amount should receive the double rule? Where do we put the double ruling? It has to be on our total assets section. Assets equal liabilities plus owner's equity. So it would also be our total liabilities and stockholders. So those two will equal out, and double ruling proves that. Of the following, which amount should be equal? Again, we just went through that. That is why we double rule, is because it's going to be equaled. So we need our total assets and our total liabilities and stockholders' equity. And that looks good. Going on to the next section is our assets section. It says the adjusted trial balance and statement of stockholders' equity for Superior Corporation for the year ended December 31st of the current year can be found above. Prepare the assets section of the balance sheet, including the heading. And then it tells you how to enter the date, just like what we have been doing in the past. Okay, so we're going to use the information up here to prepare the balance sheet. So the first part is the heading. So again, it's the name of the business, Superior Corporation. The financial statement is the balance sheet. And the balance sheet is prepared on a specific date. What these values are on a specific date. So it's December 31st, 2000, whatever. Okay, so our first section is our assets section. And breaking it down in our assets section, if it's cash, petty cash, those are our current assets. Okay, so we're going to just use the balances from our adjusted trial balance here for cash. Okay, so cash has a balance of $43,355.47. Our petty cash, $200. This is pretty simple. You take a lot of these numbers right from our adjusted trial balance. Then we have our accounts receivable, and it's over in the first column because we have a contra account that goes with it. $16,305.45. Our contra account makes our regular account go down, so we have to choose, this is going to be less. Our allowance for uncollectible account is up on the top, is $2,484.22. You can see we have a line here. So we're going to take accounts receivable minus our allowance for uncollectible account to find out what our value is of our accounts receivable. And it should be $13,821.23. Merchandise inventory, and then we just go down the line. You could put $81,017.26. Supplies for office is $777.65. Supplies for stores, for the store, $516.36. Prepaid insurance, $2,800. Notes receivable, $4,960. And our interest receivable is $95. Then the next line we come to is total current assets. We will add up all of those in that column. So we'll take the numbers from here, add them up, and we should come up with $147,542.97. $147,542.97. Okay, so we have our current assets taken care of. Now we're going to work with plant assets. Okay, and the plant assets are basically the ones that are going to end up having some type of depreciation. So our office equipment before our depreciation is $19,916.14. The depreciation makes the value of our office equipment go down, so it has to be less the accumulated depreciation is $12,436.20. So if we subtract those, the book value is $7,479.94. Our store equipment is worth $47,318.49. And then it's going to be less the accumulated depreciation for our store equipment of $16,626. So again, if we take our store equipment minus the depreciation, we will come up with the book value of, I have to figure that one out. And you can do it, and you can do it too. So we have sorry about that. It should be $30,692.49. $30,692.49. Our next line, we are going to put total plant asset. Again, we're going to add those two together, and we should come up with $38,172.43. Okay, so now that we've got our current assets and our plant assets, we are going to figure out what our total assets are. So we will take this number, our current assets, plus our plant assets, and we'll come up with $185,715.40. And if I plugged in all the numbers, it should be correct. And I didn't. This was my bad. So I just plugged in the wrong numbers. That one should be, oh, I switched it around. And that one should be 20 cents. Oops. Okay, but you can see how we figured those out. Okay, moving on to the last section. Try not to make a mistake in this one. Sometimes I put in the numbers too fast. I knew what that's like. But our liabilities and equity section. Complete the balance sheet. The valid values for the text entry cells of the first column can be found in the section above there. Okay, so we got the first part done. Now we're going to go on to the second part here. So this is going to be our liabilities. And we only have current liabilities. So you can see you're going to go through and you're going to list all the values of your current liabilities. So you can go through and do that. You're going to use your adjusted trial balance and plug those numbers all in. So I'll give you a couple seconds to do that. All right, so you've plugged in all your numbers of all of your liabilities. Then we're going to come up with our total liabilities. So you'd go through and add those all up, and those should be $26,783.20. Next section is our stockholders' equity. Okay, and so what we're going to use is up on the top here, our statement of stockholders' equity. We're going to get our information from here in our statement of stockholders' equity. All right, so let's go down there, and it says our capital stock. So we're going to look through here, and we need to find the value of our capital stock. And you can see right here, here's our capital stock section, and it is located right here. So it's $82,500. Our total of our retained earnings, when we look through our statement of stockholders' equity, you can see that here is our retained earnings section, and right down here is the balance of our retained earnings. So it is $76,432.20. The next line is our total stockholders equity. Okay, our total stockholders equity is found right here. Or again, you can add those two numbers together, you'll get the same number. $158,932.20. The last line is for total liabilities and stockholders equity. And again, you're going to add your total liabilities, just what it says, and total stockholders' equity. So if you add those two numbers together, you come up with $185,715.40. And as a double check, what you need to do is take a look at the number you have for your total assets right here. That should equal your total liabilities and stockholders' equity. If it doesn't, then something is wrong with your problem.